Turning back to the markets now, where the S&P really close to its all-time high once again. My next guest says he was surprised how quickly the market has rebounded since the tariff announcement and warns it doesn't make sense to be back here. Joining us is Vahan Janjigian, the Chief Investment Officer at Greenwich Wealth Management. Vahan, welcome to you. What doesn't add up for you here?
Hi, Kelly. So in my opinion, the market has bounced back largely because President Trump has backed off on the tariffs. So I think that's justified to some extent. But the fact that we're all the way back to all-time highs doesn't make sense simply because the tariffs are not going away. We're going to end up with tariffs. We're still negotiating exactly what they're going to be. They're not going to be as bad as initially thought, so that makes sense why the market would come back a little bit. But we're still going to end up with tariffs, and we're going to end up in a situation where, part of that cost of the tariffs might be eaten by suppliers in other countries, but not all of it. Some of it is going to be eaten by U.S. importers, and some of it is going to be passed on to consumers. So there are two things we know for sure is that corporate profit margins will not be as large as they otherwise would be, and prices will not be as low as they otherwise would be. So for that reason, it doesn't make sense to me that the market would have bounced back to where it was before President Trump even got into office.
Fair enough. And you can look at the revenue number and go, okay, that's coming out of somewhere, to your point. But what about those who would say the administration's idea here is to use it's not a corporate tax cut, but the permanent expensing provision in the big, beautiful bill, that itself is a form of stimulus for corporate America, that it can offset some of the tariff hit to margins and otherwise?
Yeah, I think there's some truth to that, but we haven't really seen that yet, and until we have further evidence that that's exactly what's going to happen, I would say that the market is being premature in jumping all the way back to all-time highs. So if we had regained 50% of the loss or 70% of the loss, I would have said, okay, this makes sense. But it makes me very nervous that we're all the way back to where we were. We're at virtually at all-time highs. We still have a situation with massive amounts of debt. You were talking with Steve earlier about the Fed, whether they should be cutting interest rates or not. On that issue, I actually do agree with President Trump. I do believe that an interest rate cut is justified at this point because inflation is still pretty low. So I think the Fed should be cutting rates, not by 200 basis points, as President Trump suggested. But I think a 25% cut right now would be completely justified. However, President Trump wants to see lower interest rates to make the debt more affordable. I don't think that's a solution to our debt problem in the long run.
Right.
We really need to address that on the fiscal side.
Well, not least if they cut and the long end goes up again like it did in the fall, which would undermine the whole point.